Today we will be doing a question from CBQ sample booklet. This was the initial booklet released by Institute IMA. There are only two questions in this booklet. Okay. So today I'll be doing a part one question. There are two or three sections mixed in this. I could see some question from section A regarding revenue recognition, some questions from section B and C as well around budgeting and around variance analysis. And this is something I think you can also expect in the actual exam, that you will get a question, you will get a story like this. This story is regarding heating and cooling services. Now, how are we planning to solve this? What I'll do is, initially, I will read the question, I will explain the question. And once we are on common ground, then we will go towards the sub questions. Okay, one case study usually has 5 to 6 questions. So after our understanding, we will start with the first question. I'll give you some time to attempt, and then together we will solve the question, or you can cross check your answers with my solution. Chal, let's get started. If anyone of you has any doubt in between, you can raise your hand or directly unmute. Okay, I don't mind. Heating and cooling services operates in a major US metropolitan area. It provides maintenance and repair services of heating and cooling equipment to small commercial offices and retail buildings at a fixed annual price. The company collects the full amount at the beginning of the year. Okay, somewhat important, but I won't highlight it right now. HCS prepares its financial statements in accordance to US GAAP or with US GAAP. The price for its services is determined by HCS based on an analysis of competitors and market conditions. Okay. Nothing very significant. They have given some hints here and there that how the company operates. Okay. I think here the main part starts. Given the seasonality of heating and cooling business, the company's variable costs are incurred as follows. Percentage of variable cost, first quarter, second quarter, third quarter, and fourth quarter. Okay. 15%, 20%, 35%, and 25%. So when we say percentage of variable cost, let me give you some idea, okay, how to interpret this data. See, in the question itself, they had given you a hint. Okay, let me showcase that hint. There are two types of businesses. One that is usually a well-established business, and when a well-established business has previous data to track now, so वो अपना future data they are able to predict in a much better way. Now, after going through the first part, what do you think? Is this a startup where the numbers would be uncertain, or is this a well-established business? What do you think about their overall structure? Just take a guess. And here are few hints they have mentioned. Okay. When a business is charging overall price at the beginning of the period, that gives you a very strong hint. I think it's in the next line. The company collects full amount at the beginning of the year. So when a company is able to collect their overall revenue at the beginning of the year, to a large extent, okay, there can be some variance here and there, but they're able to collect money at the beginning of the year. So that is first hint. Second hint, whenever they are operating, they have good amount of fixed price also mentioned, which we are incurring. So do you think this business is a well-established business which can predict the cost in a confident way? Or do you think this is a startup or a business which has a lot of volatility? What do you think?
Well-established business.
Yes, the given data is more inclined towards hinting that this is a well-established business, or at least conveying that we are able to predict numbers with certain level of confidence. Here is how you should look at the overall structure. You have certain revenue coming into the picture. You have certain cost also coming into the picture. Let's call this total cost for now. And within total cost, you have two segments. You have variable cost, you have fixed cost. This is the kind of mind map that should get created the moment you read this data. And within this, they have given you different levels of variable cost. And it is regarding, or it is as per what metric? It is quarterly metric. So you have variable cost, percentage of variable cost as 25%, 15%, 35%, and 25%. Now, they have not mentioned clearly that this 25, 15, 35, 25%, ये किसका percent है? But it is obvious that the moment we go back to our mind map, do you see this total cost? How do we derive our total cost? Total cost is something that we estimate. And usi total cost say we can come down to variable cost and we can come down to fixed cost. So have a very tentative approximation. That this is one possibility. There will be, if there is more information around this, we will use that as well. But time being, this is the mind map that you have. And within this, there is certain percentage mentioned for each quarter, hinting us what will be the variable cost over time. Coming from total cost, or let's say some proportion of total cost, whatever they have mentioned. Moving ahead now. In addition to variable costs, the company has fixed costs for warehouse, trucks, and cranes. It also has corporate expense that include 30% of its total cost. ठीक, this is one hint that 30% of its total cost is going towards these items. ठीक है, fixed cost, warehouse, trucks, cranes, corporate expenses. Mainly we can talk about the fixed part of the overheads over here. ठीक है, fairly fixed in nature. The company manages its operations with a static budget. Guys, what is static budget? Do you guys recall? Between master, flexible, and actual. What is static budget?
It's the budget prepared, like the fixed budget.
Fixed budget. Okay, Varnika, you're going in the right direction. But please remember.
Standard cost and standard.
Master budget. Yes, someone just said it. Please remember. Yes, there are three types of budget we know. One is the master budget where everything is standard. We have standard quantity and we have standard price. Then we have the flexible budget. Any guesses what is within flexible budget? What is standard? What is actual?
Standard cost and actual units.
Standard price and
Correct. When we talk about flexible budget, our units are usually price is standard in nature, but our units are actual. Okay, so standard price, but we have actual units or actual quantity. Always remember, in the class, in a regular class, we have discussed why we are inclined towards taking standard price and why we are inclined towards actual quantity. And last budget is your actual data. So within actual data, what do we have?
actual quantity.
Actual.
Correct. Actual price and actual quantity. Spot on. Chalo, now we can continue. At the end of the year, the budgeted and actual revenue are as follows. So when they have already mentioned that the company is using a static budget, the moment you see budget, this word over here, please note this is not a flexible budget. This is actually a master budget or a static budget. And it is clearly written as actual over here, which means it is completely actual. Flexible budget ka data is not given as of now. Okay. Now we have number of clients. Number of clients equivalent to units in this case, correct? This is basically the quantity. Okay, please note number of clients whenever you are in a service business. Service means think of entertainment as a service. Imagine kar lo, okay, you are running a theater called PVR. Now within PVR, are you selling any specific product? Think of Maruti Suzuki, we sell a car. Think of Hewlett Packard, we sell a laptop. Whether within PVR, are we selling any product as such? No, we are selling a service, entertainment service. We are selling an experience. So for us, for running theater, what will be our quantity? It will be number of visitors, number of clients, number of customers. Okay, so this is your quantity. Next, average revenue per client. Again, going back to the PVR example, what is your ticket price? The budgeted ticket price, what we were expecting, $600. Actual ticket price. Maybe there's huge demand for the movie we are showing. So price bada diya. We have increased our prices. Okay, so this is how price will change. This will give us total revenue and it's simple multiplication. Okay, 5,000 into 600 will give you $3 million, same as 30 lakhs. 4875 into 640. The number should match with this amount. And lastly, they have mentioned total cost. Within total cost, please remember there are two bifurcations they have mentioned in the question. There is variable cost and there is fixed cost. Okay, going back to one more point. Chalo, wo to baad mein lete. I'm giving too many hints. There should be some fun for you guys. Let me see how you are able to understand the 30% wala point. We'll discuss that later. To better manage and respond to budget variances, do you guys see a variance in general? Is our actual data matching with budget? No. We have certain difference, so variance hai. We have certain difference, so variance hai. We have certain difference again, so there is variance. So to better manage variance, what is the company doing? Developing a comprehensive master budget for the next year. So this is for current year. Now we are at the end of the year. Now we are planning for next year. The CFO is considering implementing a monthly cash budget. Monthly cash budget. Okay, so chalo. With this, we come to the end of our case study understanding. Now, before I start the question, let me quickly ask you guys, are you guys crystal clear with understanding of the overall story? If yes, can I get Y in the chat? Basic level understanding. Are you guys clear? Okay, good amount of votes are in. I think we can move ahead. So chalo, let's start with the overall Q&A discussion. And we have two-way agenda. Okay, I just don't want to focus on telling you the answers. Wherever possible, we will also revise the concepts. But let's start with the question one for now. HCS is required to use US GAAP's revenue recognition principle to recognize revenue. I hope you are able to recall this concept. Okay, section A, last chapter, revenue recognition. Use your mouse to drag and drop the following steps into the correct order. So we have options and then we have sequence. Now to help you understand how these questions will show up, I hope you guys recall your school days ka match the following format. In your exam, there will be two buckets. There will be two buckets. There will be two boxes mentioned rather. You have to drag and drop. You have to, let's say, pick one option and mark it. Let's say if there is first mentioned, let me do it properly. If there is first mentioned over here, then you have to drag and drop. Whichever answer you choose, you have to drag and drop over here. If there is second mentioned, you have to drag and drop over here, whichever is the answer. Okay, that's how this question will come up. So for now, what we will do, we know that there are 5 points and 5 sequences. I will go through the options and then you guys tell me which one is the first, second, third, and fourth. More than happy to call a volunteer to help me out. If anyone is interested, can raise their hand. Let's start. Options. Allocate the determined amount of consideration price to the contractual application. Next, determine amount of consideration for the transaction. Identify the contract with the customer. Recognize revenue when the performing party satisfies the performance obligation. Identify contractual performance obligations. Please tell me out of A, B, C, D, and E, which is the first step in the
E.
process? Second, third, fourth. Varnika, you want to try? Okay. Varnika says
C.
E is the first one. There are few members saying C should
No,
be the
C,
first.
C. I'm saying C.
अच्छा आपने C बोला है. My bad. This will be the first one. Anyone else who thinks any other should be first? No? ठीक है. What about second? Anyone? I'll be giving you an explanation, proper
E.
explanation, but let me see what you guys are doing.
E.
E should be second. Okay. What about third?
D.
Soumya thinks D should be third. Okay.
D. B.
B.
अच्छा B should be third. What about fourth?
A.
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 A should be fourth, and obviously then this would be fifth. Okay, now I actually haven't read the options, but I am interested in revising this concept with you. So let me give you guys an example. Going back to steps of revenue recognition, how this actually works. I think in our class, I had given example of a trade happening between two parties. And for a few example, we also took example of construction process. Okay, you're building a big apartment, which will be completed in phases over the longer period of time. So how will you recognize revenue? Usko hi lete for revision. So let's say we have Varnika, who is planning to buy something from a company. Let's call this company DLF. ठीक है, infrastructure की बहुत बड़ी company है. Now, when they get into a transaction, while buying, Varnika is handing over some amount. But how do we decide that we need to recognize this? How will DLF decide that what goes into my revenue as of now and what amount is not considered as revenue right now? That is the question. So the process is simple. Here is your answer. First, the moment these guys come together, the first thing they should be doing is Varnika should identify herself as a buyer. DLF should identify themselves as a seller. So basically, both parties should identify themselves as how they are entering into this contract. Second, once they identify themselves, okay, she's the buyer and DLF is the seller. Second is to draft this contract. That what all is required. Now from Varnika's end, the requirement will be mainly around payment because she is buying. From DLF's end, the main requirement would be around delivery. Okay, from DLF's end, it will be mainly around delivery. Now, once the details are outlined, what they can do is, let's say the delivery is happening over a long term. So what they can do is they can create specific items. DLF will say that first we will deliver 5 floors, then we will deliver 10 floors, then we will deliver a clubhouse, then we will deliver a garden or other amenities and so on. And lastly, the overall jo bhi pending hai. And then Varnika will also say that, okay, as you are distributing your work, let me also distribute my payment. And once the distribution is done or the allocation is done, final part is handing over the money or doing the delivery. That is the last step. So this is how our revenue recognition process goes. Now, once you are crystal clear with this, let's go back to the options and read them carefully. I think most of you had mentioned, कौन सा C था ना? First one, I don't recall. C था क्या? Identify contract with the customer. Yes, I think this should be the correct one. Identify the contract with the customer. As I said, a buyer needs to identify themselves, seller needs to identify themselves, and they will come together for a contract. Now, within that contract, step number 2, identify contractual obligations. This should be the second step. That from Varnika's end, what payment is required, and from DLF's end, what delivery is required. Now, after this, I don't recall, but let me just read out. Allocation nahi hoga. We are yet to determine, what is to be given, what is to be delivered. Revenue recognition happens at the end. So I think next should be this: determine the amount of consideration price for the transaction. So this should be the third step. That how much means 5th floor, 10th floor, jo bhi distribution hai, and accordingly what payment is also required. Price is basically the payment part. So this should be the third step. Next, once this is done, once it is mentioned in the contract, next is allocation. Allocate the determined amount of consideration to the contractual obligation. Step-by-step distribution is done. And once this is done, last part is the payment and delivery. So recognize revenue when the performing party satisfies the performance obligation. This should be fifth. Allocation should be fourth. Let's take a vote now. Are you guys crystal clear with question number 1? Can I get Y in the chat? Any doubts, please unmute and ask me. Vashab, Tanya, Yadniki, Sohan, all good? Okay, I can see your votes. In that case, we can move ahead. Okay, first identify, contract, determine, allocate, and recognition. Correct. Our answer is correct. Now I think we can go to the next question.
Now, before going ahead, I have a message for you. I'm on a mission to build India's #1 institute for US CMA. So if you're someone who's planning to pursue US CMA and want to be part of our success story, want to give me a chance to build your career, then do consider FinStreet education for pursuing US CMA. Here, the learning is based on real-life applications, case studies. Secondly, there is a dedicated student success manager who will track your progress. And third, the placement model is inspired by IIM Lucknow's placement structure. So placement mentorship plus placement assistance will be taken care by our team. So if you want to pursue USCM and have any queries around it, you can visit our website to book a call with our experts. Or if you want to join our next batch, you can directly call this number and book your seat. See you in class.
Use your mouse to drag and drop the benefits or limitations listed below to the corresponding type of budget. Options allows space. Okay, I think these are all the benefits or limitations mentioned, and there are two categories: flexible budget and static budget. So what you have to do is read a specific point and then tell me it should go in flexible or static. Okay, this is again drag and drop you have to do. So in your exam, what you will see is you will see again two buckets. One will be flexible, second would be static, and all you have to do is pick the option and drop in the correct bucket. Chalo, let's go through all the options now. First, allows current operating. Acha, let me revise one pointer quickly with you guys. Easy hai, but I think you should be clear with this. Between flexible and between static, can you guys tell me flexible includes what? Can we revise the formula quickly? Under flexible budget, how do we calculate numbers?
Actual quantity, standard price.
Actual quantity
Correct.
into standard price.
Actual quantity into standard price. So please note, we are getting slightly closer towards actual data. And when we have static budget, it is calculated as?
Standard quantity, standard price.
Correct. Standard quantity, standard price. Thanks, Dash. I am struggling to hear you properly, Swati, but I hope it is going as per your answer only. Let me know if you have any query. Standard quantity into standard price, which basically means that there is no reference. There is no reference or even usage of actual data. It is completely standard based on complete estimates. With this idea, let's start with the options. Allows current operating condition. This is a hint to be reflected in the budget during the year. What do you think? Flexible or static?
Flexible ka benefit.
Correct. Flexible. It is obvious that it is saying current data. We just discussed. Flexible, matlab we are going slightly towards real data. Is based on a fixed level of output and not adjusted during the budget period. What do you think?
Static.
Obviously, based on fixed, the fixed word pretty much gave you a hint. This is static. Next, is useful in businesses where costs are closely aligned with the level of business activity.
Static.
Flexible.
Flexible.
Think it through. I'll give you one more hint. Costs are closely aligned with the level of business activity, which means if quantity is higher, cost should adjust accordingly. If quantity is lower, cost should adjust accordingly. So within flexible budget, do we consider change in quantity, or in static, do we consider change in quantity?
Flexible.
Correct. This should be flexible. I haven't solved this. Okay, I'll also check my answers later on, but I think this should be flexible. Next, is useful in settings where activity levels are predictable and costs are largely fixed. Predictable and
Static.
fixed. This is giving you a
Static.
hint. Correct.
Static.
This should be static. Next, is adjusted for the actual level of output and the actual quantity of revenue and cost drivers. Actual word is giving you a hint.
Flexible.
Flexible.
Should be flexible. Is more effective for goal setting and resource planning than for evaluating performance.
Flexible. Static.
Think about it. Think about it. When do we do goal setting? शुरुआत में या end में?
Beginning.
At starting while preparing static budget.
Exactly. That's a hint. Okay, so I think this is static. Given that we are more inclined towards goal setting and resource planning, this is done at the beginning. Flexible is means we are going more towards real data, actual data. So वहाँ पर we have more focus on evaluating performance. Okay, next. Allows management to analyze variances based on changes in volume, prices. Okay, there is a hint.
Flexible.
Flexible.
Yes, flexible, obviously. Okay, so let's see what our answers are. I think flexible may we have 1, 2, 4. A, C, E and F. Okay, 4 under flexible and 3 under static. I think it's correct. First one हमने flexible किया था. I think third one हमने flexible किया था. That's also correct. I think ये भी is adjusted, correct. And last one flexible था. It's also correct. Okay, our answer is correct. These 4 options are flexible and remaining is static. So let me take a vote before going ahead. If you guys are crystal clear with the question, can I get Y in the chat? Any query, any question, can unmute and ask me. No question? Okay, let's move ahead. Oh, finally, a question that we can actually solve instead of theory. Let's start with question 3 now. The total sales revenue variance for the year equals, so we have to find out total sales revenue variance. Next is, and the variance is, I think this is more inclined towards plus or minus, or we used to call it favorable and unfavorable. Okay, I hope you guys are able to recall this. For revenue items, when your revenue in actual terms is better than what was expected, than what was budgeted, this will be called as favorable. When it is lower, actual revenue is lower, it will be unfavorable. And इसका opposite हो जाएगा cost के लिए. ठीक है, cost is something that we try to reduce. So when your actual cost is lower, favorable, actual cost is higher, unfavorable. So let's start with the first point. Total sales revenue. Guys, can you see total sales anywhere? Total revenue. Can you simply take variance? This is a very easy calculation, I think.
Sir, 1,20,000.
Correct, Tanya. This should be 120,000. And what about, exactly. As Varnika said, this will be favorable for obvious reasons. You have earned more. Your manager has managed to earn more than what was expected. So this is favorable. So let's see if the first answer is 120,000 with favorable. I think we did 1 and 2. First answer 120 favorable. Correct. Next. The sales volume variance equals, and the variance is. Please focus. It is sales volume variance now. We are going one step further. Let me revise the formula before asking you to solve. Guys, what is the formula for sales quantity?
Flexible minus static.
I had given you a trick to remember. Whenever it's quantity, what numbers do we deal with? अगर quantity variance है, so it's always AQ minus SQ. Always remember, okay? We had discussed this in the class. Whenever it's price variance, it will be. So whenever it is price variance, please remember, this will be AP minus SP. Always remember. Next, I had given you a hint for this as well. What number do we insert over here for quantity variance?
Standard
SP.
price.
Exactly. We always take standard price. We don't want price impact to come in quantity variance as well. Price impact should be kept separate. So please use this reference now, AQ minus SQ into SP, and tell me the answer. Quantity numbers यहाँ पे रहे. Your clients are your quantity. Actual quantity, standard quantity, and then you have standard price as well. Help me with the answer. Also tell me if it's favorable or unfavorable.
75,000.
75,000 unfavorable.
75,000. And when we are comparing this, what number should we compare? I'll give you a simple hint. We were supposed to sell to 5,000 clients, but we only sold it to 4,875. So have we done well or have we done badly?
Bad.
Bad, exactly. So that's why unfavorable. The performance is poor. That's why unfavorable 75,000. Let's see. Correct. 75,000 is correct. Unfavorable. Chalo. Last question now. Sales price variance and favorable or unfavorable. We just had revised the formula. When it's price variance, difference between price. So actual price minus standard price. But when price is jumping around, your quantity matters. The quantity will impact your buying and selling or overall price variance. So over here, we take actual quantity. Use this formula and help me with the answer.
1,95,000 favorable.
Okay. Standard price, that was quick. Actual price, and then you have actual quantity. Is it favorable or unfavorable?
Favorable.
Favorable.
Correct. Favorable. We were supposed to sell, again, I'll take example of PVR instead of heating and cooling services. We were supposed to sell one ticket for 600. That was our budget, but we managed to sell it at 640. Of course, we have done well. We have sold it at a higher price, more revenue for our company. So it is favorable. And can someone repeat the number?
1,95,000.
195. Okay, that's your answer. Let's see. Favorable 195, 195 favorable. Great. So I think we are done with question number 3. Quick vote. Are you guys clear? Can I get Y in the chat? Okay, good amount of votes are in. You also have the explanation. You can refer to this later on. I think next is fill in the blanks type of question. Let's solve right away. Question number 4. The fixed costs are recorded on straight line basis. The variable cost pattern is representative of the delivery services. The amount of operating income should HCS record is. Okay, I think this needs some level of revision. Let me quickly show you. Guys, whenever we are targeting operating income, see this word says operating income. It is same as operating profit. So how do we calculate operating profit? We have operating revenue, which in this question, it's same as just revenue. Then we have operating costs. In our question, we have two types of costs. We have VC and we have FC. Okay, I'm giving you hints. Okay, please be attentive. After this, I'll give you some time to solve. So whatever revenue you have received, also let me check, are they asking for budgeted or actual? So what amount of operating income should HCS record? Guys, whenever we are recording means we are reporting this number, quarterly report to a regulator, to our investors, to our management. Should we take estimated numbers or should we take actual numbers? What do you think?
Actual numbers.
Correct. We always report actual numbers. So we are talking about actual numbers over here. Going back, we have VC, we have FC. There is also one more hint. There is certain proportion given. There was quarterly numbers given, quarter 1, quarter 2, quarter 3, and quarter 4. So as per the question for quarter 2, refer to the quarter 2 number. But there was also certain bifurcation given. If I'm able to recollect, there was total cost and there was certain bifurcation of 30%, 70% split. So both you have to consider. From revenue, once you deduct VC, once you deduct FC, this should ideally give you operating income or operating profit. I think these many hints are enough. You should be able to solve this. Very easy question. Revenue directly mil jayega. I have already told you actual numbers dekhne. From this part, VC, focus on quarter 2, focus on FC. FC, now one more hint. Okay, when they have not given you any specific metric for FC, the easiest way to extrapolate technical term है, but approximation उसका एक close alternative हो सकता है. Extrapolate मतलब mathematical adjustment. The best way to do mathematical adjustment is take yearly FC divided by 4, it will give you quarterly FC. I'll repeat one more time. VC के लिए they have given you quarterly numbers. For FC, quarterly numbers are not given. They have only given you 70-30 का split. So whenever you are calculating FC, and if there are only yearly numbers, if you divide this by 4, you will get quarterly FC. This is called extrapolation. Okay, it's a heavy term. Easy meaning is approximation कर रहे हैं. Okay, so with these many hints, please give it a try. I have started receiving answers. That's good. Vasudha, Swati, your answers are matching. I'm not sure if it's correct or not. Calculation ke baad I'll get to know. So now to give you outline how you should approach this question. See, we specifically want data for quarter 2. And within quarter 2 as well, we are looking for operating profit. So what should be our approach? We should take revenue for quarter 2 minus जो भी VC है for quarter 2 minus whatever is your FC for quarter 2. This will give us operating profit. Now the main point in the question is there is no quarter 2 level data given. What have they given us? They have given us total data. Now we have already discussed we should be going after actual data. We are looking for data that gets reported. So total revenue is 3120 and total cost given to us is at VC level and at FC level there is a split, but at total cost it is, I think 210. Here total cost 2100. 3.12 million, that's your revenue. 2.1 million, that's your total cost. Now the first split that we can take over here is out of this total cost, how much is VC, how much is FC? Guys, is there any other hint given to split this? Can you see this line? What kind of hint this is giving?
30%, 70%.
Correct.
30% fixed cost.
Yeah, exactly. Your corporate expenses are basically your fixed costs. And this is given as 30% of total. So can you guys tell me what is 30% of this total cost?
6,30,000.
Okay. This will come out to be 6,30,000. Okay, I can write it as 630,000 then. Now we got fixed cost, but this is total fixed cost. What do we need? We need quarter two data. So can I convert this into quarterly data? How can I do this? I've given you a hint. What should we do?
Divided by 4.
Correct, divided by 4. Guys, what is the final fixed cost?
1,57,500.
157,500. Okay, thank you. That was helpful. Next, now please be very, acha, one more easy calculation we can do. We also know this is 70% of this amount. So can you guys tell me what is 70% of total cost?
14,70,000.
14,70,000. 1.47 million. Yes, tentative, correct. And we shouldn't write it as 14 lakh. US exam. So this will be 1.47 million. Okay. Now here's an interesting hint. Out of this total cost, this is total VC. Total VC. What is the actual quarter to VC given to us? Is there
15%.
15%? And if out of total VC, if 15% is your quarter two data, then if you have total revenue as well, what will be quarter two revenue? What will be
15%.
quarter? Again, 15%. Correct. Why? Because revenue and VC go hand in hand. Revenue and VC go hand in hand. If you recall our discussion in the class, how do they behave? Revenue, VC, and FC. How do they behave? If revenue increases, VC increases, FC stays the same. If revenue decreases, VC decreases, FC again stays the same. So revenue and VC always go hand in hand. Simple example, if your revenue is 20, VC is 4. And if this gets doubled, what happens to a VC? This also gets doubled. This will become 20, this will become 8. This is how VC and revenue behave. You have studied this. So going back, this will be 15% as well. So guys, now can you tell me from your total revenue, what will be your quarter two revenue? Starting with revenue. What is 15% of your revenue?
4,68,000.
468,000.
468,000. And from your total VC, what is your 15%?
2,20,500.
2,2,500. Excellent.
2,20,500.
500. 2,20,500.
220,500. And that's it. We are done. Can you guys help me with the final ultimate answer now?
90,000.
90,000. Okay, there you go. Let's see if this is correct. There you go. It is correct. 90,000 as our final answer. And I think the numbers are also matching. 468 minus 220,500 and 157,500. So that's how you do these calculations. Okay, sure. Next. So again, we go back to drag and drop. Match the following. These are the options. This is the sequence. Sales budget, cash budget, production budget, COGS, budgeted cash flow, and budgeted balance sheet. Oh, this should be very easy for you guys. Chalo, which is the first budget that we create?
Sales budget.
Let me also draw the overall value chain or chronology of budgets. We always start our budget by estimating how much sales we will do or how much revenue we will generate. And to do these sales or generate these revenues, which is the next thing then we estimate?
Production.
Production budget.
Correct. Once we know sales, we also get to know how much units we need to sell. So once we know units, from units, we can figure out production budget. So this should be second. Once you know production, which is the third budget that we can work on?
Cost of goods sold.
Correct. COGS. You can third. Once you know production, you have to consider all the inventory, which is, let's say, in raw material format, which is work in progress format, which is finished product format, and come up with what will be your COGS. Okay, cost for specific goods that you're estimating to be sold. So this will be your third budget. Next, once COGS is done, what do we get? Last
Balance
budget in this chronology. Think carefully. In
Cash
this
budget.
I will highlight, okay, there are two categories of budgets. And इस category में we had studied that the first budget is sales budget and what is the last budget?
Cash budget.
Cash budget.
Correct. In this category, fourth or last budget in this type of analysis would be your cash budget. And once you have all these numbers, now you move towards budgeted statements. Okay, a complete view basically of your business. So within this as well, where do we start? Between cash flow and balance sheet, what do we make first?
Balance sheet.
Balance
Correct.
sheet.
We will work on balance sheet first. So I think this should be fifth. Sorry, that's cash flow. This will be fifth balance sheet. And once balance sheet is ready, we will move towards cash flow, which should be sixth. Let me check. First, sales, production, COGS, cash. Okay, excellent. Okay, this was an easy one. So a quick check. Any queries? Any questions? Can I move ahead? Okay, let's go ahead. Last question for the day now. How could a monthly cash budget benefit HCS? Select two answers. So we have around 3, 4, 5, 6. 6 options. 4 are incorrect, 2 are correct. Focus on these two. And they're asking how cash budget can benefit. So something that helps with or benefits out of creating cash budget. First option. As variable costs are incurred unevenly throughout the year, HCS needs to forecast its inflows and outflows to manage cash balance. Okay, think about it. Seems fair enough. As HCS has both price and quantity variances, it needs to determine the break even to manage its cash balance. Think about this as well. Are we really targeting break even or not? HCS will need monthly cash budget to prepare adjusting journal entries. Do we really need a budget to make journal entries? Think about it. Knowing its cash needs, HCS can optimize its short-term borrowings and investments. So basically, whenever you have extra cash, you will be able to invest. Whenever you have less cash, you will be able to borrow. So these kind of decisions, can you take them based on cash budgets? Think about it. HCS will use the monthly cash budget to assess its variable cost and cost flow assumptions. Lastly, monthly cash budget will help HCS determine profitability of individual client. Do we really go for profitability through cash budget? Think about it. Please submit your answers in the chat box. Select two options. Benefits of cash budget. This is something we are looking for. Okay. So I think most of you got the answer. So I can directly go to the explanation part now. I'll decode each and every option, why it's correct or incorrect. But I think your answers are matching. Okay, A and D, that's correct. Let's understand why they are correct or why rest of the options are incorrect. Okay, as variable costs are incurred unevenly throughout the year, which is correct. If you observe, sometime it was 15%, sometimes it was 35%. I'll quickly take you to the question just to show it is actually uneven. It is quite uneven, 25%, 15, 35, and again 25. So variable cost is fairly uneven. Coming back to the question. As variable costs are uneven, HCS needs to forecast its inflow and outflow to manage its cash balance, which is correct. If you know how much you need to spend, if you can forecast and prepare for it, that's a benefit. You'll be able to manage your cash balance properly. Next. So A is currently correct and I'll put it on hold. Next. HCS has both price and quantity variance. It needs to determine break even to manage its cash balance. Do we really go for break even analysis by using price variance and quantity variance? No. Do we really use cash budget for break even analysis? No. Okay. Break even goes into different segment. We contribution margin nikalte and all those sorts of things. They are not directly related in this context. HCS will need monthly cash budget to prepare adjusting journal entries. Again, we don't adjust journal entries based on cash budget. We have certain policies. कुछ bad debt हुआ, बाकी की चीजें हुए. It goes as per accounting rules, not as per budgeting rules. Accounting rules are different, budgeting different. Knowing its cash needs, HCS can optimize. Optimize means make best use of the situation. So whenever you are able to invest and earn as much as possible, you will do it. Whenever you're falling short of cash, preferably you will borrow and you will prepare for borrowing accordingly. So this is also good. Option D on hold, no problem in it. I think we have done 4 options. So this is on hold, incorrect, on hold. Next, HCS will use the monthly cash budget to assess its variable cost and cost flow assumptions. Again, we do not use cash budget. Rather, we use multiple budgets to check this. We will also go for COGS. We'll also go for production. Wherever VC is there, we'll also check our DL budgets, other budgets, wherever variable cost is coming into picture, and we'll go beyond that. Means cash is just a small component. Focus is on cash, not on costs. So again, not a proper option. And lastly, the monthly cash budget will help HCS determine profitability. Do we really use cash to evaluate profitability? No. Profitability is evaluated in a different way. Gross level pay alike, operating level pay alike, and all those kind of analysis. So F is also out, which leaves us with the two options, A and D. I am happy that almost all of you have given the correct answers. Let me see if there are any different answers. ठीक है. All answers are A and D. Last call. Any query, any question, any doubt regarding this? No? ठीक है. This brings us to the end of the sample booklet. इसके बाद जो question है, this is from CMA part 2. So not relevant for you guys. What I will suggest you is that after this, okay, now our new updated support package. If you see the new support package, there are a good amount of CBQs mentioned over here, around 5 to 6 questions for part 1 and 5 to 6 for part 2. Please make sure you practice all of them. Someone was asking me, ये booklet कहाँ पे मिलेगा? What I'll do is I'll share it in your group right away, so that you don't have to again go around searching for this. So both question banks are with you. Make sure you practice them very well. Right now we have around 6 to 7 questions only from IMA. Maybe some additional from Hawk. If we come across additional questions, we will cover them in the class as well. But I hope today's session gives you a fair idea regarding how to prepare for CBQ. Okay, now your exams are quite close. I won't take much of your time. All the best. Continue with your studies.